Live on Facebook. Good morning, everybody. Good to see you. Welcome, welcome, welcome. Oh, yeah. Hello, hello. So we're on a break in crude here. We're looking for the 6290. We just rolled a July, and oh, why did you film me there? That's kind of a silly place to film me. Big selling spike here. Apologize, it's not showing my annotation tool here. So we're missing the profile from yesterday. And that's because on this platform, the contract that I'm using when I roll to the July contract, so I did the homework last night. I know that the level that I'm looking for is a 6290. We're actually inside of yesterday's range, and kind of the expectation is that we'll either kind of, there's my man.
Ding, 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 ding. Good morning.
Good morning.
How are you? Happy
Good.
Friday.
Happy Friday. So anyway, crude, we're looking, there's kind of two areas I'm looking to participate at. One is the 62.90 and one is the 63.96. And the 63.96 is a composite level that has been traded in the past. So if we can get outside of, let's see what just triggered here. Oh, I don't know. Something jumped around something. This is the Globex trade right here. So this is what happened overnight. You can see we're inside of that, but we are inside of yesterday's trade. And we're just going to kind of see what they want to do. Okay, NASDAQ. What's the NASDAQ want to do?
Trying to rally a little bit. After ripping everybody's face off the last 2 days.
Yeah.
It decided it wanted to sell overnight. It looks like it's fun how all the business happens over Europe time frame.
Right. That is interesting, isn't it?
It is. And what I was pointing out to you yesterday on those IBs in Asia, and I thought that was interesting.
That is really interesting.
Except I don't want to get up at 2 o'clock in the morning to catch it.
Right.
Let's see what they did last. I want to look at that. I didn't look at that this morning now that I say that. Let's see what they did last night. Oh, yeah. Wow. Asia had a 3-point IB. Europe had a 2-point IB. And man, that Europe one broke hard. Wow. Compared to our IB at, and of course I'm talking the ES here. So what, 59 up to 84. That's a big IB, especially on the ES.
All right, what the heck here? Here we go. So we've got these single prints here. As long as they can hold this 25 area, we'll see if we can hold it for 5 minutes or so. They could push back up toward here. But in terms of areas that I'm looking to be active this morning, what was that? Okay, bonds. I have to watch the bonds here. This is going to be another one of these crazy mornings where everything moves at once.
Yes, it is. Morning, Nicholas.
Good morning. So we've got, I mean, this is kind of, this is the level down here. If we can hold this, I'd like to be long NASDAQ. If we get up here, like the 7614, 7644 areas, I'd look to be short. And so when you're in between that, then you're kind of like, well, I can either establish a position in those directions, or I can wait to see those hold. Right now, this looks like a pretty strong open, potentially, if we hold the open.
And we're zipping, we got singles on both sides of us. That's a difficult one.
That's the hard part.
Yeah, I know we should get a pause up above if they rally this thing in that 70, 70 to 90 area. What did you say this morning? 80? What was it? Can't remember. Was it 80?
Mm-hmm.
Yeah. So I mean, we probably see a little bit of pause there. But then we have down below, we have that 75.11, 75.10 area. We can't forget about that. Just way too close.
Yeah.
Crude's looking a little whippy here.
Yeah, it is.
And we are trading the July contract, guys.
That's right. That's right. We are trading July. So for those of you who have not been on one of these before, let me just real quick do some orientation, and then we'll get into some questions as we're kind of waiting for things to jump in. But welcome to our live profiling session. Reminder of the risk of these products. I mean, any trading product, things that you can control, absolutely. In markets, you can absolutely control your risk. So be mindful of that. When describing kind of our approach, our buddy Tom Incorvia talks about this. Fundamentalists interpret balance sheets, technicians interpret price, and profilers interpret behavior. So that's essentially what we are. We're behaviorists as we look at markets, and so the positions that we tend to take are based on how we're seeing market participants interact with price behaviorally, which keeps us on the hard right edge. This is actually we're just taking what you would have seen in the pits, and we're converting that to a graphical format. Just a little bit. This is me. I'm Josh. I'm the founder of Trade with Profile, and also with me is JP. So we are your guides this morning, and just a little bit about our process for traders who are looking to gain trading consistency. So they're trying to find a way to be able to come with an idea every day to the market and consistently extract money from the market while defining their risk by keeping their risk manageable. They go through our development pathway that focuses around these three objective focus areas. So these are kind of, they undergird everything that we talk about with our community. So if you're one of those traders that you're just like, I'm struggling to find an idea every day, or I'm struggling to be really consistent, talk to us. Now back to markets, shall we? So in these two products specifically, I'm looking for a intraday directional trade. It would be not a scalp. I'm looking for an intraday swing trade. So what that means is, NASDAQ moves about 100 points is what they're expecting right now. I might be looking for 25 points. See if I can find something like that. Crude's moving about $1. I'm looking for about 25 cents there. So 25 cents crude is $250 per contract P&L. 25-cent move in the NASDAQ is going to be closer to $500 per contract in P&L. Could also be a risk. That's why we watch all of this. Had a couple questions that people had sent to me prior to us kicking off to go over. So one of them had to do with like our morning routine. Like, what does a morning routine look like? And so I do all of my prep, like levels of interest are all based on how the auction behaved on the prior day. So we'll look at how the auction behaved, and then that sets areas of interest, inventory levels. So these peaks over here in the profile that we have, I mean, those are areas where we expect, like right now, like the fact that we're buying off of this, that's the auction's behaving as I would expect that it would behave, which is good. And in fact, I'm gonna get that. So we're building kind of an initial idea for a plan after the market closes, and then when I get up in the morning, I kind of look to see what how did Globex trade? How did we behave overnight? What's that look like? How did we interact with anything? Did we change bias? So for example, there's a 75-72 level from yesterday in the NASDAQ, and that level is was kind of a if we got below that, then I was coming in with a bias that the buyers were controlling the auction, but if we got below that level, that could change things. So I'm kind of wary right now, buyers could still resume control, but if they can't get above that 75, 72, or if they can't extend the range higher after the first hour, then I'm looking for more selling control. So those are things that I set. So then I get in the morning, then I kind of refine my plan, and then we're set to go. And I mean, that's unique to me and the types of trades I'm looking for. It is, I would, definitely have a plan, and definitely key things that I would say on a plan are where are you interested in participating? So being able to determine prices that you want to actually do some activity in, and nice. And then, do you have kind of an idea of what the expected playground of the product would be? And then, where do you express your setups inside of that? So, have kind of the playground areas. I'm looking to see if my setups will show up in those, and go from there. But I, definitely keep, I try to keep it pretty casual. I'm ready to trade it. I've been thinking about today's trade since the close yesterday. Another question had to do with session volume versus delta. So let's look at a couple things. So one of the ways to know that you're in step with the market is to look at how people are behaving. And one of the ways that we look at that is with something called delta or volume. So price and volume are the only two indicators that everybody in the market actually absolutely looks at. And on this, you're looking at 5 minute data here. These are 5 minute periods, and you can see there's like a negative number under here. So what that means is that it's actually the difference between buyers and sellers. A negative number, it's an inverse, but it actually means that the buyers are winning. And then on top of that, we have period volumes. So these are 5 minute periods where you're getting, you can see the buying volume. So from an order flow standpoint, we're seeing buying, lots of contracts are being traded, and then when those contracts are being traded, they're being traded on the ask versus the bid. So the ask is the lowest price that you can immediately buy a product. The bid is the highest price you can immediately sell it. So an impulsive, strong market, people are just going to hit the bid because they want to get in. And when that happens, the difference between at each price is going to show up as a positive delta, and that's a way that we can see. It's another form of confirmation that, hey, I'm in the flow with the auction. So if we saw an auction going higher, but we saw weak volume and we actually saw negative delta, that would be an indication that, hey, maybe there's a turn. There's not as much conviction in this direction. And JP, they're just going to zip those singles up, buddy.
That's a repeat of yesterday.
Yeah, guys. Right now with this whole China trade, it's a really good. Most days have been what we call trade later days, meaning because of the volatility that takes place overnight, it's best to just kind of wait and let the first hour of the session, where 80% of the volume is going to take place, let that kind of simmer out, and then express some risk.
Yeah, because yesterday and the day before, if you didn't come in long, we didn't get our trade till we had a structure cleanup. What time? That was like,
yeah, it was late.
What time was that? Like 12:30, 12:45 yesterday.
Yep,
it's crazy.
One other question that I had that somebody sent me prior, and by the way, if you guys are unable to make these, feel free when I send out the invite to shoot a question, and we'll add that to the deck so we can go through those. The next one had to do with option trades. So let's talk about different types of trades that you can compose. Now, what we're talking about are intraday directional futures trades. This would be the classic, what people would say day trading, right? So I'm looking to get in and get out and go back to cash. I do not often hold outright contracts overnight. Now, what's nice about futures is you can have stops that run, overnight, and some platforms even allow trailing stops. So like if it's moving in your direction overnight, it can trail that. You don't have to watch that. But another way to do durational trades is to do that using options. And I would say you could Google a lot of this stuff. But say, for example, I believe that the auction was going higher. So like right now, I'm long the S&Ps, but I'm long through sold put credit spreads. So what that means is that I've sold a put and then bought a put below that, and that's defined a range. And basically, as long as we stay above a certain price, that collects money. We did that in soybeans last week. Same thing. There was a spike in implied volatility, so there was an opportunity to sell a credit spread in the puts and bag that. And I think we got maximum profit on that. JP.
We took it all home, baby.
We took every bit of that home.
That we waited. You know how long we waited for beans? It's been years, man.
Yeah. So I mean, it's a cool way to, especially if you don't want to be in front of markets all the time, and also a way it's more capital efficient and allows your trade more time to work without these, because what can be difficult when you're looking at products like this, where the P&L changes $20 a tick, if the thing moves 100 in a day, that's $2,000 of potential risk. So now the micro products definitely help that, right? The micro NQ now cuts that to every tick is now $2 because it's a tenth the size. You can trade the QM in crude, which cuts that in half. So rather than $1 being 1,000 per dollar being 1,000 P&L, it's 500. So there's ways to trade that smaller. But options are a really way that you can even get smaller than that, but still increase probability and actually have a probability around that. So we do employ those for more swing trades. And I'm trying to think if there are any that I was looking at.
The other thing too is with the option side, like Josh said, if you got work or if you have other things you're doing, that's one thing. The other thing is time, just straight up time. If you like on those bean trades, we were out probably 45 days. Josh, you were a little bit longer than I was. Yeah. I was in 2 weeks earlier than you were, but I was in the trade 2 weeks before Josh was in. Yep. So I was sitting there waiting for that thing for 2 weeks and no problem. My risk was defined and it helps you, and it also allows you to take advantage of moves like that. And that's a beautiful thing. So.
Absolutely. All right, so those were some questions I had earlier. Looks like I might have some other ones. Nope. Nice. Awesome. Okay, so you can see NASDAQ's coming, back to the 75.81 level. That is actually, so when a product gaps below a level that I was looking for it to be support, that becomes resistance during the RTH session. So we'll see how they interact. I mean, that's not nearly as significant a level as the 76.14 level is. And right now we're trading inside of yesterday's range. So a little bit of non-conviction as far as the product's going. Cool. Any other questions anybody else got? Feel free to feed them. You can either put them in the chat or in the Q&A, and we'll cover those. And then in the meantime, we're just going to look for an opportunity. So depending on how this here's how I'm kind of thinking about this right now, is depending on how this first hour sets up in the NASDAQ, if we can hold above this 75.24, I might be looking long for a target of 76.16. If we trade all the way up to 76.16 in the first hour, which would be, let me turn on my stats here, just kind of give me an idea of where we're at here. I'm going to turn off the 5-minute because I'm not looking at 5-minute. So right now we've done 213 ticks in the first 30 minutes. Our average for the first hour is 254. We do have some singles here in Globex, like up to 75.91, 75.82. See these thin spots in the profile. That would be pretty likely we might see those. And anyway,
Hey, just real quick, Nicholas has a question. Nicholas, yeah, on your TOS platform, on your chart, there's a chart settings on the top bar. It looks like a little gear, or maybe, yeah, a little gear. So if you open that up and then you go to equities, options, futures tabs, underneath that, you can show extended hours. That would be the Globex hours. That would give you Asia and Europe ranges as well. So.
Yeah. Good question, Scott. So I see your question. You're asking, when trading the first hour, do you anticipate an IB? So we have an expectation, of where, we're watching the behavior to see how wide it is relative to its average. So think of it like, a, the IB, the first hour's range is a container, and I've got range to pour into it. So the narrower that is relative to average, we typically expect greater extension. The wider it is relative to its average, then we typically look for muted extension beyond that. And so we don't really know until it's done. But so far, the fact that we traded down one tick and then up higher, this looks like a potential open drive open type. So as long as they defend the open, we'll look to go higher. But again, we need confirmation on that. If they trade back through the open, then I think
as you can see, it's the stairs up and the elevator down right now. So don't be surprised if we rip it through the open here in the next 10 minutes. Yeah. That's why I know a lot of people are active off the open, and that if that's your setup, we were talking about that when we were talking about that. Was this week, Josh? We were talking about a friend of my son's who trades, and he does an open range breakout, but it's the 30-second open range, and that's an old, for you, if anybody remembers the old pit days, that was what a local would use in the S&P pit. I think they'd use it in the NASDAQ pit too, but in today's world of algorithms, I'm not so sure that works. I mean, if it does work for you, great. I'm not saying it doesn't, but we tend to like to wait a little bit, just let that stuff shake out. At least give it 30 minutes. I mean, it's hard to tell in 30 minutes what's really going to happen.
Mm-hmm. Yeah, the other nice thing is that after the hour, we can actually have some statistics that can help us know the probability of whether we'll see further extension. Well, and to that end,
go ahead.
What I would say about that is, so in all these products, the stats are there's about a 97% chance over running 5 years of data that we will exceed the first hour's range. What you don't know is which direction.
You got some clues, but
you got some clues. And actually, like right now, when I look at the delta, so now the delta is showing a positive number. That's actually selling delta. So in the session right now, sellers owning this this auction, and we can kind of wait, because if we trade back through the open, we extend initial balance low, we've got lots of potential opportunity to go lower. And so I want to make sure that we can hold the 75.24. Otherwise, it could be. And waiting will give us better confirmation.
It's the usual average volume for CL at this time. At this time, or
at this
on
time,
the open?
let me show you.
Yeah, let's take a look at that.
Let's take a look at this. Let me zoom in here.
Speaking of which, speaking of the open, watch the NASDAQ. As I said, in the next 10 minutes, it could knock that open out, which we're pretty close here.
So average at this time of day is 88,000 contracts. In crude, we're trading 53,000 contracts so far. So in the first half hour, we were 17,000 contracts below average. We're in the second half hour. Now we got 6 minutes left, and we're another 17,000 below. So below average day in crude oil at the moment.
And we just rolled, so don't, I mean, that could be, I mean, there's still people in the other contract. I looked at the contract this morning. I think there was still half the volume in that. So,
yeah.
So just FYI, it takes a little while.
Yeah, that's right. This is comparing it to, the continuous contract, and we're trading the July contract. There's still some people in June.
Yeah, I won't touch crude on the Friday of roll. I really don't. Just not worth it. It's too funky. It's just like the roll in the, well, we got roll next month coming up here. So for the indexes, hard to believe June's coming up. Holy cow.
Yeah.
Man. All right, now let's see what they do here. They could roll this back over and go test that open and clean those singles out up on the bottom, which wouldn't yeah, it makes sense. I mean, got a number at 75.05. And you do it. Josh, what's your delta readings? I want to check on mine here and make sure we're good.
For which one?
NASDAQ.
I got 459 negative for the RTH.
What's your ETH?
And that is ETH is negative 4,039.
Okay.
That's a strong number.
It is.
Dow actually looks stronger. Russell's near its lows.
Yeah, Russell looks like it's trying here, so.
But VIX is lower. That's interesting.
Yeah, that is.
ES got that naked POC at 28.52 to the downside. Then they've got 28.78 to the upside.
Yeah. If they give this a little shock, I'm going to see if I'm watching this. See if they go down, take those singles out. It'd be cool to see that happen.
If I could get a little bit of a rally in the bonds, I might look for the short there.
Yeah.
That showed up on our quick sheet this morning. So to identify some potential opportunities. So these are products, they're core products that I look to trade, day trade, and that's crude and NASDAQ. And then there's other products that we look at for, just kind of keep in mind for potential swing trades or a potential intraday swing trade. And then there's another mix of products that we tend to only trade when they show up like this, where they either flare green or red. So green means look for them to buy, red means look to sell. When there's multiples in the same kind of, like I'd pick a currency rather than try and trade all of them. And I need a trigger on that too. So the bonds showed up. So between the bonds and the notes, I like the bonds better. So I'm kind of watching the bonds and also watching wheat. I wonder where wheat looks like. Where's my grain chart here? Nope. Cancel. Man, I'm fat finger in this. What the what? Okay. There we go.
We could just have after the last two, after this week, we've had some amazing moves here this week. We could just rest today, just sort of chop it around a little bit.
Yeah. Yep. So they're recovering a little bit, not quite as seller heavy. If crude oil can take out the low here of the first hour at 63.07, I'll look for, I'll be looking for opportunities basically for pullbacks up into this area and then a move down here. Really
Nicholas, I don't, for one, define the gap. Is it the actual edge of the range, or is it the actual close price gap you're talking about? because I don't have statistics on that, and I don't typically trade a gap. It's not a trade of mine. Yeah, now if we're headed for the gap and I'm in the trade, that's probably going to be a target. But everybody defines that differently. So if it's the range, which means that you open below the previous day's range and you go to fill that gap, that's a different gap than, okay, we're going to go to the close price. That's a gap.
Yeah.
That one, the close price. Yeah, but I'm sorry, I just don't have any statistics on that one. I couldn't tell you either way. That's not something I work on, at least. Josh, do you know?
Yeah, I mean, I don't look at a close as a gap, because you almost always. So what we'd have to do is you have to run a study of, how often do we trade across the close of the prior day. Would be the study that you have to construct. But when we define gap, we would say, are we in totally different ranges than the prior session? So let me look and see on the big board here if we had any products that completely, well, the Dow opened completely outside of yesterday's range. The Russell opened completely outside of yesterday's range. So that's what we would define as a gap. So bonds are not gonna give me a punks. So then when we look at that, you're completely outside the prior day's range. So then there are statistics that you can look at based on the percentage of the average trading range of the product outside of that range. So if you're inside of 25% your ATR, there's about a 65% chance you'll close that same day. If you're at 25 to 75%, it's about 50-50. It could go either way. If you're more than 75%, then there's a 3% chance that you'll close the gap that same day. So not all gaps are equal. So we'll often tell traders, we'll say, hey, if we have a gap, then we call, basically say gap rules. So the gap rules are, what size of gap is it? And then there's other things you can lay on top of that, is, like things like what's the posture of the auction? So where are we in relationship to other value references? That's also important. And yeah.
So anybody have any questions? I mean, you can throw out any questions. I know Nick's always got great questions. Thanks, Nicholas.
Yeah.
But anybody else have any questions you want to, I mean, anything. And by the way, guys, I'm just going to state up front, there are no stupid questions, okay? If there's anything you think is stupid, believe me, Josh and I have either done it or have at least experienced it in some way. So there's no, this is one of those industries that, that I just don't think you can get away without making mistakes.
Yeah.
And so there's no embarrassment, no nothing. So please just throw them out there. If you got them, that's good. We won't embarrass you. Listen, I will tell you, Josh and I are expert at one area. We've made every mistake in the book. Okay. We've just happened to recover from it and be able to move on. And that's half of this business. So, and hopefully we can help you reduce the amount of mistakes and time it takes to get to where you want to be, which would be consistently profitable. So, I mean, I will be honest, the last 2 days were very tough trade for me. Mm-hmm. You had to wait. Waiting is the hardest part of this game. Waiting, because, listen, like yesterday, that thing was ripping to the upside and you're thinking, okay, there's $1,000. Okay, there's $2,000. Oh my gosh, really? And you just want to get a piece of that. So the first thing you think is, okay, I'm going to fade this market. Right? And that's your emotional brain coming in at that point. And you're like, okay, that may not work. And then they rip your head off on that deal. Now, that's what people, newbies, guys that haven't been around for a while, that's what that's happening to them. And then from there, looks like they're going to sell this thing now. So from there, then you're thinking to yourself, okay, when do I get to fade this market? Well, we got an opportunity. It took a long time to get that opportunity. Mm-hmm. So, no bad questions, guys. Believe me.
Yeah, Scott, I see your question about the gap rule stats. We actually spend a whole week with our community talking about profiling statistics. Which statistics? So statistics are helpful to set expectations. They are not helpful to say a guarantee. So it's really, they were helpful for me to go, oh, here's a reasonable expectation for where a market might go today based on some of these measured statistics. It helps me know what's kind of normalized behavior, and then I still have to have my plan around stuff that I'm not expecting. But gap rules. So then all of my studies are based on 5 years of data. If the gap is less than 25% up to or less than 25% of the ATR away from the prior day's range, there's about a 65% chance it will close the gap in that day. And that's actually a trade that we often look for. If we got a really small gap like that, we'll watch the order flow, and we may be active really early to see the trade come back to like a prior day's point of control. So it's basically what you're calling. It's what's happening is the market is opening a little bit out of imbalance, and then you're looking for it to balance quickly on the open. The second is what we call a tier 2 gap. So this is where you're past that 25%, and you could be up to 75%. So let's say that the Nasdaq's ATR was 80 points. So you're talking about your gap in 40 to 60 points away from you're outside of the prior day's range. At that point, you got about 50-50 chance that you're going to close the gap that day. So then we always wait. We go, well, I really want to see some conviction closing the gap before I'd want to go with that. If it holds, then I see that as the auction had conviction that held, and I may look to establish in the direction of the gap. The last one is a tier 3 gap. So that's where you are at like 75% or more than 100% of the ATR or expected range away from. So like that would be like if the Nasdaq, opens 80 points or more away from the prior day's range. That's a tier 3 gap. There's a less than 3% chance that will close in the same day. And typically on days like that, the move was made in the gap. so then the actual day itself becomes really uninteresting because we just kind of rotate in a small range because everybody's like, well, the move's pretty much done. Not much left to do. But so those are the gap rules. Yeah, I people will say, I remember people say, well, all gaps close. Like, okay, well, let's think about this. April, the month of April opened with a gap. So from March close, April, we gapped higher and we never touched that gap from that Sunday open for the entire month. We didn't come back to it until this last week. So that was, hundreds of points that would have gone against you if you had tried to, fade that because you were like, well, I want to be in it because of the gap. All right. Sweet. Yep. Awesome. So I am looking here, I'm seeing that the delta is increasing to the sell side in crude. We have a tighter than average initial balance, so I'm expecting that if they take out 63.07, they could make a run for 62.90 pretty quick. Again, I'm looking for potential either responsive long at 62.90, or if they wiggle below 63.07 and don't go straight to 62.90, but kind of pull back towards 63.34, I'll be looking for a 5-minute short time frame trigger where I can, I'll know what the target is. The target is 62.90. Then I'm looking for, well, how much am I willing to risk to go for that 62.90? And if we're up here at 34, then you're looking at 40 cents of potential opportunity. So 10, 15 cents would be the maximum that I'd probably want to risk to go after that. So I'll try to find some selling on a 5-minute that I could lean against to set that up. Here they go. Okay, so here comes that IB low break. So we'll see if after they break that, if they can give us, then I'll switch to looking at like a 5 minute.
There they go.
See if, I'm just watching them add contracts down here. And the delta is increasing to the sell side, meaning that they're hitting the bid. So they're 1,000 contracts now at 13. Yeah, they're gonna punch through. Come on.
NASDAQ starting to sell. They're trying to go down to that open down there.
Oh, that's a great question. So what made us want to watch the NASDAQ instead of the ES? So for intraday kind of swing directional trades, I just like the NASDAQ better. It's got a little bit wider range and play to it. And I personally have found it, this may or may not make sense, but I found it a little more forgiving than the ES. So that's why I look at the NASDAQ instead of the ES. There's also, based on, like the amount of capital per margin versus potential opportunity, it's more capital efficient to trade the NASDAQ than the ES.
It is. It's a good market. It moves, we have range.
Mm-hmm.
Personal preference. Nicholas.
Good question, though.
Yeah, great question. Any other questions, guys? Let's see here.
Things like poor, high, low, and have stats regarding to them.
I love the poor highs and lows because I just know those are a magnet. It's like having singles. Like yesterday, we knew. I wish we could show this. I can't show it, and I'm not sure we can show that. But we had it. So on this move yesterday, and I'll tell you the trade that we had. The yesterday move, we were sitting there waiting and waiting and waiting for something to happen, and we started to accept price at that higher level up just around that 7,600 area. And then what happened was we had a situation where we had
here, I'm gonna blow out this profile and you'll see what JP's talking about.
Yeah, thanks.
Just a second here. Let me scroll down here. And then I'll expand this. Okay. So if I look at, you can see all of the periods here. So there's C, D. So in B period, this is what we call single prints, down to 84. So you can see in C, D, E, F, G, and H period, we were all trading above these singles, and that's what we call poor structure. What that means behaviorally is that an auction is moving impulsively across prices so much that's not even checking to see if they're valid. So when you see periods overlapping each other, the auction is doing a good job of going back and forth to see if those prices are valid. But if we just see it launch and we leave a zone like that, there's a good opportunity from a trade if you come back into it. And so like when we got back in here in H period, that set the stage to look for opportunities to clean this up, and we did take that trade. So the target was 84. So we were looking for, I think we got in at 7.
Mm-hmm. All right, come on down to the close now. Let's see if they do it.
Delta's increasing to the sell side. So if they take out the low or the open here, we've got a 7502 is a reference. We also do have some singles. So this is, they don't all close on the same day. We do have some singles down here from 61 to 13 that if we get acceptance below 7504, they could push this all the way down here today.
Yeah, and so just like what he talked about, on yesterday's trade. We waited for that trade, and here's the interesting thing. The YM and the ES had already cleaned their structure up. So the only thing left was the Russell and the NASDAQ. Now, we don't trade the Russell. It's too thin right now. But the NASDAQ set up an opportunity for us on a bounce that if there was just no buyers in that bounce, that gave us the opportunity to get short and clean up those singles. Now, unfortunately, they had another bounce that took us out of that trade. We did lock in, what did we lock at, 6 or 7 points on it, which is, it's not great, but hey, it works. We would love to have the full trade because the full trade would have been another 10 on top of it, I believe. And, it happens. You get wiped out. And of course, as soon as they wiped us out, they ran down and cleaned it up just as we suspected it would be. So those are great opportunities. Like, singles, poor highs, I love them personally because I just know that there's going to be a magnet on them at some point. Now, do I trade for that? No, if I'm in the trade and it's in that direction. Now, sometimes we do have a overnight structure cleanup trade, which we tend to like quite a bit. But if we're in that direction, those are definitely targets for us. Like, I would say the singles below here, we're going to clean those up if we break this open. So, and at this, and again, this is a guess, guys, it's not a recommendation, that at this point, I'm probably guessing we're going to go down and get those singles. But I'm not short at this point. It's Friday. Here's my thoughts on Friday. I've been around long enough to know that Fridays are not what I would call great days to trade, especially if you've had a good week. Now I guess I thought about this. I said, on Fridays, if you've had a good week, don't go back in looking to try to dig out more profits of the deal. It really has to be a no-brainer, stupid, simple. Oh my gosh, if I don't take this, my wife's going to take a ball bat to me, right? Mm-hmm. And type of trade. However, there is one way of doing it, is going down to the micros now and do it. And then there's hardly any risk there, which is great. I thought about them like, okay, this works out wonderfully. Now, also, it works the other side of it too. If you've had a bad week, don't think that, and please don't do this. Don't ever, if you've had a bad week, just take Friday off. Don't think you're going to come back in on a Friday and get all your money back, because you won't. Mm-hmm. Okay, it would take a major lucky situation to do that, and I just don't recommend it. Take the weekend off, look at what happened. You made mistakes. We all make mistakes. We've all chased trades. We've all done stupid things, gotten out of stuff. If your wife takes your ball back to you, you're done messed up. Yeah, thanks, Nicholas. So anyway, just those are, listen, if there's anything I can give you today that you can use, that's it. That is a big one right there. Just understand that your job in this business is to keep as stuff to a minimal as possible. When I say stuff, that's losses. Okay. And keep, I don't want to say keep your emotions in check, but what you have to do is you have to manage you better than anything else. Because I think we talked about this last week just a little bit, where, our brains are designed, we have left brain, right brain, of course. And, emotional side, logical side, all that kind of stuff. And I can't, when one thing happened, like yesterday was a great example of it, where we had that big move, and your brain is like, oh my gosh, I've missed it. And then you're psychologically thinking, I got to get involved with this, or I need to make money. Right. Mm-hmm. That's you getting in your way. You're not managing you very well on that. And that's the part that if you're able to do that, as well as keeping losses really tight, then you have a career in this. Yep. It's when you get out of control and you do things like start fading that market on the way up, when you look at your delta and it's super friggin' strong, and you look at your ticks and there haven't been anything below the zero line or whatever you're using as an indication, and you're still trying to fade this market. Okay, it's time, you got to stop. All right, and get a hold of that. So Fridays I come in and I go, I'm trying to find a reason not to click that button. So anyway, I'm done off my high horse.
Hey, it did make me think of ways that we can help everyone as you're working towards trading consistency. If you ever just shoot us an email and say, hey, here's the types of trades that I've been doing. Here's what's going. I mean, we'll give you a fair shake. We also we exist to try to help shorten the curve on your development. There's so many resources out there. The hard part is to figure out what's value add and what's not. And when you've got a good base of understanding, a foundation around that, then oh, this is a tool that I can add to what I'm doing and I can refine it. Would love to help you kind of figure out, so if you're intrigued by the intraday futures trading, which a lot of people, think that it's so glamorous. A lot of it is sitting, like JP just said, looking for reasons not to trade, because it's a business where every movement changes your P&L if you're in a position, right? So you need to understand and have an expectation of how auctions work, what's the behavior around that, but then you also have to have setups that you're looking for that you can name and say, oh, I'm looking for this specific trade. Like right now we're looking for what we call an IB trade in either of these products, which is I'm either looking to go with whoever extends the range, or I might look to fade them. So how that might look in crude is if we take out IB low, I'm going to look for opportunities because I've got that 62.90. I'm going to look for opportunities in pullbacks higher to be short. My absolute risk would be 63.55, but I'm targeting that 62.90. I mean, obviously, to get my risk tighter. Well, if we go straight to 62.90 and doesn't give me an opportunity, then I might look for a fade back toward today's value, which is at 63.97. So that's the setup. I'm just waiting for the conditions to show up. In the NASDAQ, if we get IB high, I've got that target level up there at 75.79 and also 76.15. So I may look for opportunities to pull back to say 75.43 to be long if that pullback happens before I get to those targets. Otherwise, I could wait for us to get to 76.15 and then see if sellers step up, and I'd have a target back towards the 75.43. That's the fade. So that's the setup inside of the behavior. I've tested those. I know the expectancy around those trades, and I just have to wait for that to show up. So if you're not naming your trades, if you don't have categories around your trades, it's hard to assess performance. But again, you don't have to look at these products. You can look at stocks. All this stuff works in stocks. I'm working with a guy right now in Australia, but that we're looking at Forex because he, when he's awake, you can't trade U.S. markets. So Forex is a really cool proxy for that. So if you're just in a place where you're just like, I'm looking for consistency, just have a conversation with us. We do set some time every week for some one-on-one consults just to kind of go, okay, here's what you've been working on so far. Here's where your understanding is. And we'll make some recommendations of, hey, go read this book, or, do this. Or it may be, hey, come hang out with us for a week and see how that goes.
Yeah, absolutely. And while Josh is looking for that, I'm looking for every reason to turn my computer off and call it a weekend.
Yeah, same here.
Yeah, I mean, it was a decent week. And here's how I assess it. It's a decent week. Covered some nice option trades this week. So yeah, I'm feeling pretty lucky to get out of here. This was a hard week. I mean, there was a couple guys that were long in the channel. I'm not sure how Matt got long in that deal, but I know, never mind. I know how he did. But anyway, I did not. So I missed a big move, and I don't know. It happens. And here I post this and I say this. I know people just get sick of it, Josh, and when you hear it, you're going to laugh about it. But I say this so often, and you know what? It's probably the number one mantra that you could follow in trading. Guys, there's going to be thousands of trades, many more trades out there in the world. Okay, one trade is not going to make your trading career. Don't ever think that. I don't care what you're trading, equities, currencies, commodities, options, or anything like that. You may have a big trade someday, but it will never, ever make your career. But I can promise you one trade will end your career and can. Mm-hmm. So listen, there's going to be many more days like the last two where they just open it and drive it into, and then there'll be days where it's the opposite. They open it and drive it into the ground, right?
Yep.
So please don't feel like you have to do something. I'm a dog lover. I got one right behind me laying on the floor here, enjoying the nice cool morning here in the desert. But I will tell you, I grew up in the Midwest, and we had dogs that just roamed everywhere, and we had gravel roads all over the place. And some of these knucklehead dogs would chase cars. And we know what happens when dogs chase cars. Nothing good comes from it. I will promise you. Okay. I mean, there's many a time I've had to go get them. And it's like when you chase markets, I will tell you, it's like a dog chasing cars. You may catch a couple good ones and you may feel pretty good about it, but in the end, it doesn't end well. So
that's a good word.
And if you've ever seen it, plus it's not a pretty experience. I'll save the stories for some other time over beers.
Yeah. By the way, when JP talks about in the channel, so for those who are part of our development community that are working on building their plan and their approach and their trading playbook, we use Slack as a communication device, and then we're communicating intraday around specific opportunities. So there actually was an opportunity this morning to be long the NASDAQ called a Globex imbalance fade, which, you're opening inside the prior day's range, you're away from the prior day's point of control, and as long as we hold inside the range, you can look for what is happening here is this responsive buying back toward yesterday's value. It's a pretty good trade when it shows up. So we had a guy that grabbed that.
Yes. And sorry, I didn't make that clear. People are going, channel, what channel?
Yeah.
I was going to make a comment. Where was it? It's interesting to note that ES has tendency to close green on Friday. It may be true. I don't know. I don't know how many Friday. I don't have that stat. Do you have that stat, Josh?
I don't. But I feel you. I know that. I know what you're talking about. Where you're just like, man, it just seems like it always was to, it's definitely been like that for the last several months.
It could. I mean, you very well could.
Ramp we've had. That's one where it's like statistics can be hard because it's like flipping a coin. Like I know that if I flip the coin enough times, the average is going to be 50-50. But man, I could sure flip a coin a bunch of times and just get heads.
Yeah.
So.
But have you ever seen those statistics, and watch out for these guys if you have a Twitter following? You see the statistics like, oh, well, the probabilities of us going into recession if they raise tariffs on, on countries like China, and the last time they've raised tariffs to the tune of what President Trump has, should send us into a recession. Well, okay, yeah, but how long did it take us to get in that recession after that? It's like, okay, next quarter we're not in a recession. It could take us 2-3 years before that recession hits. Well, okay. I mean, I could grow hair in 2 or 3 years too. I mean, but I'm not going to bet on that. I mean,
right.
It's sort of silly on some of those statistics, and you just have to be very cautious about them. There are statistics we know that there's high probabilities that we will test one side of the IB on a daily basis.
Yep.
So, hey, real quick on this, I just looked at the NASDAQ. So they went down and they sniffed the open. Let me see, what's that low on that last swing low is 75.25. The open is what, 75? What do I have the open at? 75.18. So they went down, sniffed them, and this is an algorithm trick right here. They go down, they sniff it, thinking everybody's going to get to the open, right? And then what happens is they get those what we call pikers, thinking, okay, I'm going to grab these 5 points when we hit the open, and they just rip it on them, right? And now look at us, we just made new highs on the day. So anybody have any questions? I'm surprised there isn't many questions.
What do you mean? There's been lots of questions.
Well, I mean, interesting. Okay. Ivan, where are you located at? I'm just curious.
I think he's in Vancouver.
Oh, are you? Okay.
Or no, cool. Wait, that's somebody else. Sorry.
Yeah, you. It is Ivan, right? Am I pronouncing it correctly? If not, I'm sorry. YZ. Oh, it's Evan? Boy, I butchered that. I'm so sorry. Well, listen, yeah, okay. Yeah, I'm so sorry, Evan. All right, where are you located? Are you in BC?
Oh, Quebec.
Oh, okay, cool.
Quebecois.
Quebecois, yeah. Sweet. Welcome. All right. Anybody have any other questions? Answer anything. Markets. If you want to look at a market, you want to look at a chart. If you have a question about an indicator, non-indicator, why Josh is a beast on the bike. I don't know. You name it, and we'll answer it.
And we're gonna do that in 2 minutes. We're gonna let you guys get on to your weekend.
Yeah, and I'm about ready to get on to my weekend. So for me, here it is, guys. I'll tell you what I got. It is, well, it's 7:30 my time. So that is, hang on a second. Let me check this out. I gotta look at this. So the at this point, we're in the middle. Okay, in the middle of the range. The only way I would, I mean, unless we got some tweet out like we did 2 days ago, I don't anticipate us taking the high of yesterday out. I mean, not to say that it can't, but that's almost 100 points higher than where we are trading right now. After the last 2 days, I am expecting rotation and then maybe a move into the afternoon. After 9 o'clock my time, which is exactly what, an hour and a half away, I shut her down, which is 12 noon Eastern Standard Time. Why? Because most traders on the East Coast won't do much after 12 noon. The algorithms will, but the traders won't. If you have an executing broker, they will call it a day and push those trades into Monday on the deal. It is the 17th of May. We have nothing going on that's significant. I don't know. I saw where it's your post, Josh, on that Brexit, or no, you didn't post the Brexit, where they pushed, they're at a standstill on that Brexit deal in the UK. That thing's never going to get done. How long have they been working on that?
Oh, years.
Yeah, so nothing that I can think of. I look into next week and see what's happening on Monday. Hang on, I got to look at that, come to think of it. Let's see, 20th. Sure. Man, next week's a dud. We have nothing next week, okay? Just a couple of Fed heads talking. So at this point, I don't anticipate much. So I don't have a trade the rest of the day. I really don't. We are right now I'm not even going to take the IB at this point. I would love to take it to the downside, clean those singles up, get down and test the 7,500. That would probably give me what I want. Mm-hmm. But I don't think we're going to do that in an hour and a half. So for me, I can almost say, other than cleaning up some option stuff, and I got to roll a couple contracts here, I would say that I am intraday wise done. So
awesome.
I wish I had more to give you guys, but I don't. We're not going to make stuff up here. So my weekend is driving Uber. Well, there's nothing wrong with that. If you're making money, I don't think there's anything wrong.
Risk-free way to build your trading account.
Yeah. So did they risk-free? I wouldn't say it's a risk-free.
Yeah, it's not risk-free. There's still some risk.
There's other risk. There's no inherent risk, but there's risk.
Not the same type of risk.
It's a death box. I don't know. Nicholas, you in the U.S., Nicholas? I know we've asked that before. I'm sorry. California. Okay, good. So, shoot, what was I going to say? Did they go on strike? I thought they were going on strike. Did you guys go on strike? They go on strike often. Oh, okay. All right. Nothing gets done. All right. Well, as long as they pay you, that's what matters. So I don't have anything else, Josh. I want to open up one more time for questions. Any last questions you want? If you want to private text us that's fine. Going once, going twice. Sold to Josh.
Yeah. Thanks for joining with us. We'll be back next Friday. Look for the invite. If there's a specific question that you want us to address, feel free to send that before. That'll go to the top of the deck. We'll touch those first. It'll also have a link to, if you want to set up a one-on-one consult with us. Again, those are first come, first serve. Set, some time each week for that, just to have some conversations, to just say, hey, how can we kind of think about this, and kind of where are you at? And again, there's no sales part of that. We're really just interested. We do this because we're wanting to help traders succeed and shortcut where what has taken us a long time to figure out. And obviously, if we think that it'd be beneficial to do stuff with us, if you're at that stage of development, even in that case, we give everybody a week to spend with us to just kind of see if it's a fit before you make any further commitment. So try to keep the pressure really low so that you can see how that goes. But hope everybody has a fantastic weekend, and hope you find reasons not to trade, or if you trade, it was according to your plan and what you're looking to do. And with that, we'll leave you till next week.
Yep. Thanks, guys. Have a great weekend.